Hey everyone, welcome back to FiscalVoyage. I'm Felix, and today's video, it's a subscriber request. Corey, he commented on a video that I made in January of 2020, and this stock, Franklin Resource, ticker symbol BEN, I had it as a hold recommendation at that time period. And Corey, just as you can see, commented that he bought a lot of shares of this company recently. So we're gonna look back at that video, and we're gonna look at was it a good buy? Did Corey did a good move buying a lot of shares of this company? So we're gonna look at that. But first, if you're new to the channel, make sure to hit that subscribe button, as well as if you'd like to make money, hit that like button and check out my free ebook in the description below. So here's Corey with the comment here. Should do an update to this company as I put a big healthy dose of money into the company. So I thought, okay, let's do an update on this video. So you can see here, Franklin Resource, ticker symbol BEN, stock analysis on January 2020. Here's the video. The price at that time of the video was January 18 at $25.74. I had a fair price with the average estimates of $22.54. So the company looked to be overvalued at that point, about 12%. So I gave it a hold recommendation, which was a good thing, because after that, so on January 18 is when I created the video, and then you can see, of course we had the shutdown. So this stock jumped or dropped down almost 40%. You can see here, April 3rd was the low. Let's see, March 23rd, 40%, 41% drop since that video, and then since then it's been down about 2.53%. But this gives us a good opportunity, and I can see why Corey invested more or bought shares of this company, and we're going to look into that further. First off, the company continued to pay out its dividend throughout the year, so that's very positive, and it looks like the next payment is going to be a dividend increase. You can see here from 2019, they increased it in December. So I'm expecting another increase as well this year. And some of the good things about this company, if we look at the dividend scorecard, they've been growing dividends for 40 consecutive years. 5-year growth rate of 17.62%. Good payout ratio of 40%. So the dividend looks very safe. So far I like it already. And then we go to the summary over here. Right now it's going less than the price that I originally had, and the yield at 5.07. Earnings are expected to be $2.71, giving it a PE of 7.8. So that's a very attractive PE ratio for a financial company. Most financial company tends to be around a PE around 10 or 11 or even 12. So let's look at the fast graph for this company, and you can see here for Franklin Resources, the company is very cyclical. It goes up and down a lot. You can see throughout the years. In the early 2000s, it was losing earnings 15%, 6%. But then in 2004 all the way to 2008, before the financial crisis, it jumped tremendously, 54%, 43%. But then in the financial crisis, it lost 42% of earnings. But this is I find this very interesting actually. This year, you can see here, they end fiscal year on September, and this year they actually had an increase in earnings. From 2019 they had $2.35, and in 2020, or fiscal year 2020, they earned $2.61, which was an 11% increase. That's very surprising considering the economic shutdown and things like that, because a lot of financial companies' earnings are expected to be lower than 2019 earnings. So I find that very interesting and very positive actually, which makes this stock kind of attractive right now. So if we look at the price, you can see here the stock price is very volatile. The same thing with the company earnings. But as you can see here, when there's times when it was in the lows, it jumped tremendously. If you were to say, for example, to buy it during the financial crisis, and up to this peak here, not even the peak, let's go from here, you had a 16% annual rate of return, 165% total return until 2015. But of course, it's been coming down because you can see the earnings has been dropping, so stock follows earnings. But because the stock's following earnings, you can see now earnings this year is up 11%. Next year they're expecting it up 4%, 2%, and then 4% in 2023. These are all estimates. But if we shorten this time period to a 5-year estimates, it looks like the company, based on the fast graph, is a very attractive valuation. You could have for the next 2 or 3 years a total annual rate of return of almost 30%. So that's very attractive, with a high yield, 5% dividend yield, 12.3% earnings yield, and the company has been growing dividends for, what was it, 40 years. So that's very impressive. I like to see all that. S&P credit rating of A, so it's investment grade, high quality company, 13% long-term debt to cap ratio, very impressive. If we look at the forecasting, analysts are expecting about 6% 3 to 5 year long-term growth estimates for earnings. Here we see about 3% for the next 2 or 3 years, but the valuation looks very attractive. If we were to revert back to a PE around 10, you can see here 22% annual rate of return. So the dividend looks very safe. If we look at operating cash flow for Franklin Resources, you can see here, for the most part, operating cash flow has been very good throughout the years. It looks like 2019, or fiscal year 2019, it dropped tremendously, almost negative 97%. For 2020, I'm not sure why they didn't come here, but overall, throughout the years, you know, it didn't even cut the dividend in the financial crisis. It actually increased it. You can see here from 2007, it had a 20 cents per share, 2008, 27% a share, and 2009, 28%. So it actually increased it, where a lot of financial companies were cutting their dividends. So that's very impressive. That just shows the strength of this company. So that high dividend yield of 5% with that earnings yield of 12.3, very attractive right now. So I think Corey did a good move with this company, buying shares at you know, maybe he bought it in over here at $18 or under $20, but right now even at $21, and it's down today 2% here, so about $21 is a very attractive price. I think it is a buy. I think he did a good job. 5% yield, 12% earnings yield, very attractive company right now. Long-term dividend growth, so I find that very positive. So those were my thoughts. A quick look on Franklin Resources, ticker symbol BEN. As you saw, I think he did a good move. Corey did a good move in buying shares of this company. Looks very attractive. 5% yield, 40 years of dividend growth. The 5-year dividend growth rate is extremely attractive. The payout ratio is good at 40%. So overall, it looks very solid. Earnings grew this year when a lot of company earnings were down versus the 2019. So that's very impressive. And they're expected to continue to grow for the next few years. So I like that a lot. It looks very good price right now. Well done job, Corey. And thank you guys for watching. If you're new to the channel, make sure to hit that subscribe button. And if you like to make money, hit that like button. And I'll see you guys in the next one.